Welcome. This is the December 31st episode of the Trading Pit, the last show of 2024. And we're going to be breaking down the Bitcoin and crypto markets with human and AI insights. I am your host, Marconi White. And in part one today, I'm joined by Benjamin, the whale hunter, and Amit, the range sniper, who's going to answer when...
Let's go.
A little bit of background feedback. All right. No, we're back. Okay. So last show of 2024 has to be out with a bang. So in part one, we're going to be breaking down the crypto markets, going over the ranges and asking what will happen in January of 2025. Part two, Ben Lilly is back with his latest issue of State the Network. And we're going to see what 2 weeks of activity have brought to Ethereum, Bitcoin, or Sol. And again, which one is going to win the battle as we go into 2025. But first, it's rapid fire. And since it's the last show of 2024, I'm putting the hot seat on these three guys to answer what are their price takes going into the year on your favorite, well, at least the majors, BTC, ETH, and Solana, as well as what's their hottest take for 2025. You don't want to miss that. Join us on YouTube. Join us on X. Let's get started. Benjamin, I'm going to kick it off with you. I want to know, what's your take? What's the price target for Bitcoin, Ethereum, and Solana? Give it all three, all at once.
BTC, I think 200K. Ethereum, 5K. Solana, 500.
Okay. Now, are these targets? Are these like you shooting for the moon? Are these like 60%, 80%? What's your confidence level in that?
Around 80%.
Okay, 80%. All right. So for those looking for some out of the moon, kind of crazy talk, this is down on earth. Okay. All right. Amit, same questions to you. Bitcoin, Ethereum, Solana. What are your price takes for 2025?
For BTC, I'm praying for it to go above 100K to start with.
You're keeping it simple. Okay.
Exactly. I mean, as we have always talked, I'm never looking at long-term horizon. It's basically next 3 weeks.
Live a little. It's the last day of the year.
Yeah, exactly. So week-on-week basis, that's what I'm after. So if it goes above 100K, I'll be very happy. For ETH has been really, I don't know what to say. The way it fell off the cliff from 4K. Even if it get to 4K, that's the first target for me. And Solana, it's very strong. Solana basically 250 to 260.
Okay.
It's not 2025 target. It's basically that's what I'm looking at. So if it reaches that, then we'll see how far it can go from there.
So if you really want to keep yourself grounded, you're gonna listen to Amit and just look for the targets that he has for basically next week, starting sometime in the next 10 days. Ben, I know we're going to be, bringing you up a little bit later in the show, but same question for you. What are your price targets for Bitcoin, Ethereum, and Solana? Remember, just in case you don't want to go too big, I think Arthur Hayes said 750K to $1 million by 2026. And then we've had Bitwise, I think, came out earlier this year, or just in the last couple of weeks with their price targets. I think it was similar to what we just heard from Benjamin. What are your thoughts here?
Well, if it's like Price is Right, if I just do a low number, technically I get on stage, right?
That's right.
That works.
That's right. This is a game show. It's a game show question, right?
Yeah. Well, so for Bitcoin, I've mentioned it before, and I'm still there. It's just for the mimetic purposes, the 169420. That's my on Earth type of target. But if you wanted to moon target it, probably about 240 would be the top to see. For ETH 10.4K is where I'd be sitting. A lot of catalysts, especially with staking yields coming for ETFs.
Yeah,
a lot of hype there. Moonshot, that would be 14K. Very hard to reach that, especially after it generated all that momentum and just decided to cut itself in the throat here last week. Solana 400 feels like grounded, and 640 would be the moonshot.
All right. I think you embraced the game as best you could and really came out there swinging with a couple of good targets and some nosebleeds. Obviously, we're going to have to see what the year brings because right now I think everyone was kind of looking at the price action last 2 weeks and everything kind of fell off a cliff, especially with some of the ETF outflows. All right. So before we get into the actual data, I want to ask each of you for your hot take for 2025. Benjamin, I'm going to come back to you and ask, what is your hot take for 2025?
It will be AA agents. I think that will be the zone to look at.
AI agents. You mean from an investment standpoint or just where all the attention's going to go?
I think it will be from both macro, finance, employment, everything. I think it's going to be significantly important and could significantly impact everybody's lives.
I feel like you woke up choosing violence in a very subtle way when you say something like it's going to impact everyone's lives, because everyone thinks, my family, whenever I bring up AI agents, they think Terminators. Are you forecasting a Terminator type of view? Or are you forecasting maybe a Star Trek kind of view?
I think AI agents will be Terminators of jobs.
Well, you really did wake up on the violent side of the bed. Okay, so we got AI agents for the destruction of humanity coming in 2025.
No, not humanity. Human jobs, probably.
Oh, human jobs, because we do so well without jobs. I've seen those stories. I remember the 1930s from history lesson. All right, so we got AI agents for the win for 2025. Not destroying humanity, just our jobs and our well-being and our mental health. Okay, Ahmed, tell me, what is your hot take for 2025?
Yeah, I can't differ. I mean, it has to be agentic work. I mean, so much so, right? We have seen the workforce, they have changed their name, Salesforce, to Agent Force. So agentic work is coming very hot and it will have a major impact on everybody's job. And that is for sure. There is no way about it. And specifically, I mean, so far this year, it was all about LLMs. I mean, how you can chat about, how it can solve your problem, coders and all. Next year, there will be a lot of work that is going in at the moment on the kind of mathematical side and the video generation side. So 2025 will be all agentic, and yeah, there will be loads of open source projects coming up. So it will be interesting.
So what's your view on where we're going to see it very, very first?
On video generation side, because it's a lot of work going on at the moment. So the first quarter will be video generation, second quarter will be mathematical, and last towards the end of the year, it will be all agents. Okay.
Well,
I think 2025 will be the year we'll see a fully functional AI-based video content creator who is competing with the likes of Mr. Beast in terms of numbers, in terms of creation, in terms of quality, in terms of fun. I think we are going to see something like that. That would be the massive.
That is a hot take. Mr. Beast is going to be dethroned by AI.
Yeah, so it's like at the very least compete in that tier is what I'm looking at. Because I think there's going to be a little bit of disruption in the influencer and the KOL industry, both crypto and otherwise. That's primarily where I'm looking at a lot of difference making as well.
Yeah. Well, I'm glad to hear it because I don't like the sound of my own voice. Let me know if you're watching the show. I see JV. I see Being Invested. Let us know what your hot takes are for 2025. Love sharing with the team. All right, Ben, you've got the harder question now that these two guys came out swinging with AI agents that are not going to destroy humanity, just take all of our jobs and purpose for living. But put that aside. What's your hot take for 2025?
Well, I'm also bullish on AI, but I'm not going to, hit on that horse again here. Instead, I'm actually going to cheat and try to say two, because my first one was having to do with a lot of activity moving back on chain and moving away from centralized exchanges and platforms, which we saw the downfall with BlockFi and Celsius and Voyager and all those platforms, as well as FTX in the last cycle. And since a lot of activity is moving on chain, I think we were going to learn, at least near the end of the cycle, the importance of decentralization and the importance of having lots of validators and nodes and what can happen in the result of not, really prioritizing all those things on chain. What could be the consequences? But I think that's going to happen in 2026. I think 2025 is not going to be when we learn that lesson. Instead, what I would pick for 2025 is having to do with the crumpling up and disposing of governance tokens. I'm excited to see that become, a joke, hopefully, as we look back on 2024 and kind of before that, as hey, we were just trying to get a token out there, but we laughed and said it was governance, like it had value accrual or something. But those things will change. We're starting to see some really strong flywheel effects take place. Virtuals, for example, having that token really kind of sit at the center of that ecosystem. You're seeing what takes place. I mean, it's been on a tear over the last month. So that, to me, we're going to have this revival take place next year. And I feel like once we see one of the large blue chip DeFi tokens do that and make that shift, it's just going to be like a domino effect through the industry. So really excited to see that. We're starting to see a little bit of revival of discussions around, strong value accrual designs. AI16Z has been talking a lot about that. So it's, as an economist who loves looking at incentive mechanisms, looking at, these tokens pulling demand, this could be a really good change, especially for investors coming in the space who want to, I look at you, token terminal, when you do price to sales ratios, but if these fee mechanisms start to translate and be closer tied to kind of the valuation of a token, we could see a lot of, these types of ratios actually work. Investors really kind of grasp and embrace it.
Okay. So there you have it. We've got the hot takes, which is AI agents coming in hot, dethroning Mr. Beast and his world that he's invested in, that he's going to regret not having sold it for $1 billion. And then getting into mathematics, according to Amit, as the year go by. And then on the crypto side, it is the end. It is the beginning of the end, or perhaps even close to the end, the pace at which we move here for governance tokens. And just here, I see we got a couple of comments here. JV says, massive recession and a major dip across all markets. Way to bring the cheer, JV. DeFi could explode. Bullish on AI agents coming from being invested. Obviously, these guys are as well. It's going to be a very interesting time. All right, Ben, we'll have to come back to you, talk about flows. But for now, let's get into the actual numbers here. So, our last show was 2 weeks ago. We had a little bit of time off, a little bit of restore for the family. And since that time, I think last we were recording, Bitcoin was trading around 106, 107, kind of went into the low six figures. Since had a pretty good pullback. Now it seems to be consolidating. I looked at numbers over the last week. Everything is basically flat from BTC, ETH, and Solana. The ETF flows have continued to show a lot of outflow on the BTC side, but up on the Ethereum side. BTC saw about just under $1 billion outflow over the last 2 weeks, whereas Ethereum saw 300 million actually coming in. But if I look around the rest of the markets, it looks like we've had a really good reset from funding rates coming down, open interest coming down, at least from what I was able to tell. So Benjamin, I want to bring you up here. What are you looking at right now? I think there was, again, there was expectation going into the last weeks of the year that we were going to get sort of a Christmas, New Year's surprise, some really good six-figure type of gains on the Bitcoin side that could eventually lead into the rest of the market. Instead, we've seen a really nice pullback, perhaps a really good consolidation. What are you seeing from a pattern for Bitcoin right now? How does that lead to what you're looking for going into 2025? And maybe add a little bit just to add to that analysis. You look at a lot of the historical information. What do you expect historically going into a January? How does that play into where we are right now?
Historically speaking, it is always better to bet on bullish start of the year when it comes to Bitcoin. compared to otherwise, unless you had a very bad year. So especially if you had a very bad year, the consecutive year is much better. Such as 2022 was a very bad year, but we had 2023 open up and do well, 2024 open up and do well. And given the fact that right before 2025 Jan, we went on a good correction across the board, wherein many altcoins, let's say meme coins or even DeFi tokens, take a huge dive. With Ethereum and Solana still yet to make new all-time highs, I think we still stand at a pretty good, base that we probably will still see a good Q1. However, and going based on those macro thought processes, it should work out well if we were buying on first week of January and just going to hold things till the end of the year for the new year. And by 2026, early Jan, you will still be in profit, is my opinion, if you are able to just buy it, lock it up in your cold wallet and go away. I still think that will be the case. But there are certain things which I do not know at the moment, which is when the new administration comes in, what all is going to happen. I have no strong basis to say that they will follow up or they will not follow up. And we see some metrics also popping up on the Fed side. So we have to wait and see how those things play out. But I would not be a bear betting over here, to be honest. If required, taking a protection is not bad, but we did see a very good correction in the consolidation. Sure, it did not go down to 80K levels like a lot of people were expecting. So I'm pretty sure, even some of the strongest bulls were expecting a correction down to 85K, is the textbook correction. But Bitcoin could surprise us, right? So it can just go on a run from here. So I'd rather not gamble over here, and as long as we are closing above 94K for the year, I think we are okay. I think we are good. I think we have a shot at going up again.
Okay, just as long as we hold on to 94K today, that's not too bad. What do you expect here in terms of momentum going into January? Let's say we close today at 94K. What signals are you looking for? Is it the Coinbase premium to really prop up? I mean, if I look at MicroStrategy, it's really had a really clean sell-off. It peaked at about $480. It's down, at least last I checked, around 300. I'm not talking specifically, or at least I don't want to be going directly into MicroStrategy, but I think of that as a good proxy for the way that the market's looking at leverage within the system, looking at TradFis, maybe looking at bets within this. Are you expecting? And I'm seeing a lot of commentary saying, hey, that's a good example of the leverage is out, at least for MicroStrategy. You can start to create a really good base going into Q1 of 2025. Well, are you expecting momentum to kind of pick up? And then specific to Bitcoin, what are you looking for? The premium, just volumes, open interest? What's on your radar?
Well, MicroStrategy has always been a levered bet, right? So it is not new. So when I see people trying to come up with new forks and knives on MicroStrategy, I think the reason it's correcting is purely because of the issuance of dilution of their shares, the discussion that's going around, and it's not like anyone is going to be able to do anything about it because it's definitely going to get approved. He owns like 46% of the shares, and another 5% is not going to be hard for him to get the approval. So I'm not so it's like the market is probably pricing in a little bit of risk on that side already, combined with it's year-end tax season and markets went up, meme coins went up, everyone made money, or let's say at least a few people made money. So even if you take from the TradFi side, we saw ETF outflows. So I think it's a lot of adjustment for the tax season as well. And January, I think we will once again see a lot of those flows come back in and start allocating, because why would you not? I don't see a reason why you would not going into an administrative cycle. If they were bullish on the Trump flows and came in, I don't think that money is going out right now, despite any of the fears that's existing, especially given the boom that we are seeing on the agentic infra and value accrual proposition that's coming up on the DeFi side. I think we're okay. The tough question is still about macro. on what it holds for Q1. I'm not able to predict much about that. But so far, BTC looks strong. It was able to hold up. We did not lose 90K. Great. We may go sideways, consolidate longer over here. All those odds are possible. But as long as we close about 94K and, January, we close about 99K, I think we are good to fly up.
All right, I'm going to bring up Amit here in a minute to talk about his sort of weekly range stuff. But I guess last question here. When you last looked at J and its price and trading behavior, has it been waiting to take some trades? Has it finally started to trade within this range? What is some of the behavior it's taking now?
It still has BTC and ETH positions, and it's still looking to take more compounding. The current position sizes are smaller. Both are on the long side of the game.
Yeah.
So I don't think much has changed over there on the directional purpose. I think the AI models are still bullish and still holding their front.
Yeah. Oh, it's always exciting to hear what they're doing. Sometimes they surprise us, right, with some of the moves that they make. Did it do a pretty good job during this recent correction? How did it perform in your view?
It did an okay job. I would have expected it bought more positions on the dump, but it did not. So that was a bit of a disappointment. But yeah, risk management kicks in, and it's just holding positions and waiting to pile up more.
There's nothing you can do about that when the risk management side of things starts to come in. Because I think one of the reasons that went in, but I'm just guessing here, because as Benjamin was saying, right, towards the end of the year, there is a lot of selling that happens because of adjusting the books and all that. So I think that played it into some sort of a decision making somewhere where it said, yeah, I'm not compounding. Let's see how the market behaves, because liquidity was very thin. And then a very good chance it could have dropped to 80K.
I feel like it's the friend at the party that cuts you off when you're like, oh no, I can keep on going. The old phrase, right? Nothing good happens after midnight. And it's like, okay, we're leaving.
Yeah. So
all right. Well, Amit, yeah, let's transition to you. Did you, as I said, it's been 2 weeks since we were here, and we were looking at the chart. We had obviously all those setups that sort of within a day kind of went away. Have you taken any time to trade over the last 2 weeks? I know there was a little bit of downtime for some. And then specifically, what are you looking for this week?
So for this week, again, this week I'm not specifically looking at the Monday ranges. It's basically weekly range at the moment because it's not making much of a moves anyways. So it's 90K. It's been tested 2, 3, 4 times. So it has held. And there's a lot of support on the order book on the 90K side. But it's still there. So I'm expecting, the trade is there to be taken. I had the trade sitting at 93, 94, 93K. So I took a trade. Basically, it was kind of laddered down to 88. And then it filled half of it and then ran up. So I took the profit on that one. But this is the previous week made. If it runs up, so expecting at least 100K here. And 100K, there is a solid wall sitting on balance. So I'm expecting it to hit 100K this week.
Okay. Which would hit your full year target, your nosebleed section target that you made for 2025. Wouldn't you be lucky?
Yeah, if it does, that would be really lucky. But given there is no liquidity, there is no interest, it would be first week basically. This week would be a bit difficult because given today's last day of the year and tomorrow is most of the places is a bank holiday. So there are only 1 day left after that. So I'm not hoping much activity to happen. But come next week, where most of the people will be back, and then after that week, there is a lot of activity that will happen towards the new administration and people talking about a lot of things. There, I won't expect it to hit 100K. And then we see from that point onwards what happens.
Okay. A question here, I mentioned earlier, we saw ETF outflows over the last 2 weeks of just under $1 billion. I think on the year, the net is sitting around 35 billion. I saw a headline that the ETFs were, the BlackRock ETF was perhaps the most successful ETF historically.
Yeah.
Which was an interesting story. The question I have for you is, your analysis really tries to distill down these price ranges into very, very basic metrics that make your trading a much more regulated system, right? With really good stop losses or rather really good risk management around when you can trade and how to layer in. Does the institutionalizing of the sector, where you've got all this sitting with ETFs, they've got flows, as I just talked about, they're coming out at different periods. And then obviously, I don't think we've really talked about on this show sort of the increase in options activity, which is likely to happen on these ETFs, going even more going into 2025. Does that at all factor into how you look at this? Does it have to, or does it still get distilled down to the sort of, open ranges relative to the week or the day?
See, options side of things, I think in 2025, we will start looking into option side of things. But options is more from the kind of a hedging side of perspective. It helps to see what dealers are thinking or which side they're protecting. But on day to day, that's basically their hedging side of things. It's not necessarily for the trading side of things. So they are trying to protect if that happens, but not necessarily that will come to pass. So on a higher range, on a monthly basis, or quarterly kind of expiry, it's good to look at where they are looking at it. But on day to day or week to week trading, options doesn't play much of a part. But ETF flows, we have seen before as well. There were loads of inflows coming in, but the price was not budging. And similar thing happened. There are massive outflows, but price is not. It's not reflected on the price as such. And again, as you said, it's one of the most successful ETFs ever. So couple of billion going out, I don't think it has made any impact on the price as such.
Yeah. So I think for all the listeners who are asking the question, because they're going to hear a lot of noise going into 2025, you got to pay attention to this news event or this activity. And really, it comes down to, until it actually shows up in the price chart and you can actually have a material connection, then you can continue to trade this way successfully.
Yeah.
Okay. All right, so there we have it. We've got a trade range for Bitcoin. Amit's target, his full year target, maybe going to be hit in the next 2 weeks. We'll try and pin him down. I promise I will try and pin him down to something more grand at some point in the future. Let's move on to Ethereum, which is really interesting. I looked at the inflows for that. As I said, it was 303 million plus, so it actually did quite well relative to Bitcoin. And even though it had a really sharp sell-off, it feels a little muted, but of course it's never really had the momentum to really move forward. So Amit, what are you looking at from an Ethereum perspective? Is it something you're looking to trade the next week or two, or is that really kind of off the table for now? It just doesn't have enough life.
I won't touch ETH. It has surprised specifically towards when the sell-off happened. I expected ETH to make some move and do something. It just went there and just flopped like anything. So I would rather look at BTC, and based on BTC, go from saying if BTC is moving, then there is a chance ETH will be moving lagging. But so far, what we saw after November, it's kind of a rotation. BTC moves first, Solana moves second, ETH is the last to move. So if it plays out that way, after Solana, I will look at ETH, but not upfront.
Okay.
But from the targets perspective, again, 3,500, please. If we can go above 3,500, we'll talk about 4K. But at the moment, 3,500 itself is difficult.
Well, you've got these ranges kind of outlined that are just really straightforward. When you say you wouldn't touch ETH, is it just because even though these ranges are established, it's just becoming less predictable? The fact that it has no momentum?
Exactly. There is no trading volume there either. It just moves very slowly, and then when it drops, it can literally take down 20-25%. So there is ETH hasn't shown any strong hand, as in it'll hold up or it's going to move forward. But so I wouldn't trade much. If you have to take a trade, if you look at the chart I'm sharing, there is a trade to be had, but you cannot go basically 50% of your portfolio. It will be around 20-25%. And again, it's your basically from previous week mid to the previous week low, you can go 3,200. See how much it fills. Because at some point there will be a wick.
Yep. So
that wick fills and runs up, it's good. Otherwise,
Yeah, and for those who are listening and wondering, it's very possible that we'll get into some of this in the trade flow. I know there's been discussions around the fee schedule and what that can mean for price, and Ben's on top of that, so we can come back to that more from a fundamental perspective. But Definitely, it seems like a higher risk trade right now. Bitcoin seems to be the one for the win. All right, so what about Solana? That's a favorite of ours. You mentioned before it continues to show pretty good strength. Is that the case for this week? Is it something you're looking at?
Yeah, Solana has been, if it can stay above 200, 194, because it was a previous quarter high, then there is a good chance it will run up. And I'm looking at monthly open like 237. So that would be my first target. But from a long-term perspective, if you look, this was the setup that was there. It basically retested the trend line, the top of the trend line, and ran up again. So it's within the downward slope, downward channel going down. So if it breaks up, then you have a trade at 230, 240. There is a small trade to be had. It's going towards previous week high, but given it's a year end and it's a weekly range we are looking at, so we have to, again, 20-25% of the portfolio all the way to previous week low.
Okay. So a decent trade. All right. I want to get into some novel ones from both you guys. Since, we usually throw in some other ones that are on the screeners, and the ones that are coming up right now that are super hot. Well, I guess this shouldn't surprise you. You've got AI16Z coming up. We've got Fartcoin. I can't believe I had to say that on air. We've got Ordi, we've got Doge, and we've got SXP. Can we look at A16Z? I mean, I think this is probably on everyone's mind, this sort of AI tokens. And there's a lot that you could unpack. I don't think we have the time today. I think from a pure price action, I saw a lot of activity the last couple of weeks, and maybe the last couple of months, people say, hey, this is it, you got to get in. But, these have already, I think A16Z, if I'm not mistaken, has already climbed to several $1 billion in market cap. There's a question of, is it kind of peaking? Does it need a little bit of time to cool off before taking a position? What do you guys see here?
Okay, so AI16Z, I have to come in over here. Right now, there is no value accrual for the token. There is nothing to do on the token as such. So, there's literally nothing to do with the token as such. Okay, so there is this AI16Z DAO, which basically, people allocated supply, and it has around $16 million worth of shitcoins, like pure AI crap shitcoins. Everything is just vaporware at the moment. We don't know what will work out. As a result of which, everybody basically aped into buying the DAO token with the hope that all those shitcoins will do crazy well, as a result of which the DAO has a value. So I look at the AI16Z tokenomics right now as just purely a vaporware play. There's no difference when it comes to this token and Arbitrum or Optimism or Compound or anything. There's no difference right now. Or let's say even compare it to any of the meme coins. There's no difference. Whereas virtuals is a different ball game, right? They basically made it as a utility token, using which you can only using that you will be able to go and trade some of those AI agent models. You need virtuals token to deploy AI agents. So it has its own utility. So I look at that in a very different perspective. Why a lot of people are jumping into the AI16Z wagon right now is because Shah has been running around the world, making a lot of connections, expanding, and the validation that he has been getting from some of the other VC firms such as Mark Anderson and so on, that's been helping them quite much. And their infra, what they have built for deploying agents is good, but there is no value accrual. So the current bet everybody is doing is that there is going to be value accrual in future. There will be some sort of an ecosystem that comes in that is able to make money out of all of this. There's a lot of discussions on tokenomics. So if you are trying to see if it is valuable right now or not, it's as valuable as anything else is. So
okay.
If you're trying to go and bet into a vertically moving chart with a 1.7 billion market cap, try to rationalize, I would say don't. Either you miss the run, just forget about it and move on. and look at what else is coming up with value accrual proposition and see if it will do well, and then something like virtuals or something else where there is already a value proposition, or just get in and just hope that this will become a $20 billion market cap in future. Otherwise, if your target is like 5 to 6 billion market cap, you might as well sit in Solana or ETH or even BTC. Won't make much of a difference.
Got it. All right. So, and if you take what Ben was talking about, governance tokens really going the way of the dodo, this would not be something to be buying for long-term accrual right now. The DAO token. All right. Well, what about from a pure range play perspective, Ahmed? Does it have enough price history? Is this something you wouldn't touch with a 10-foot pole, given how volatile it could be?
Yeah, I won't touch it. It's basically, you can drop 1%, 2%, and then forget about it, and come back in 6 months' time and see whether you have lost it all or not. It's that kind of play. You can't trade this.
Yeah. Well, I tried to buy a very, very, very small allocation, like maybe $100 back when I think it was probably the beginning of this price chart, and Solana failed me several times. I couldn't even use the wallet, so I just gave up. Which is kind of interesting from an infrastructure perspective. Everyone claims Solana is just so superior, but I've had a lot of issues with it. Maybe it's just a user error. I don't know what to say. All right, so A16Z is not something to touch unless you're okay with getting your fingers burned. What about ORDI USDT? That's another one that's on here.
A16Z, what I'm saying is, like, you don't go in because of a price perspective. If you're going in, you believe that the team is going to do wonders and it is going to figure out economics sooner or later. So the bet is not whether it is valuable at $1.88. The bet is about whether they will be able to do better in the next year. So I'm not telling anyone go in or don't go in. But if you're going in, then don't go in because the price has pumped like 50% or 100%, or there is a narrative. Go in because you really believe that the particular framework and the particular model that they're working with and the brain power that they have can basically go and become the Uniswap of AI agents, let's say. So if that is the type of thesis analogy you're able to make, then it's worth it. Go and take the risk.
Yeah, fair
Otherwise,
enough.
just wait for
a clarification. I guess I meant more from a trade perspective, less, if you're going to, I think everything you just said, you summarized it well. So, all right, well, do we have ORDI up here? Is that the next one? Last one we have?
Yep, ORDI's up here.
All right, so that came up as bullish. What are you seeing? Is this worth a trade this week?
No, I wouldn't take it.
I think you can take a small trade.
Okay.
Given where it is with respect to the cycle, there is a good chance it will run up because it's been bottomed out completely from where it started. The whole of 20.
That is a very good argument, compared to so it's basically sitting at, actually, now that when I go into the weekly, I think I like it. I think it's a great bet here because somewhere end of August, it went and retested the same zone, and now it is bouncing on top of it. Not a bad bet at all.
Yeah, it's like the whole of 2024 never happened for OD.
Oh, geez.
Well, so, even if it goes to cycle high, or even if it goes to previous month high, you're looking at good gains here.
That's a really good trade. Yeah. Okay. Okay, I'll make a bold suggestion over here. If someone wants to take that bet, take ORDI instead of AI16Z, and you'll definitely, I believe, you will definitely able to make a better return.
Yeah, because invalidation is very clear here. Cycle is your invalidation. That's $20, and it's sitting at 27 at the moment. So you can basically ladder down from 20 to 27 to 20, and if it comes to 20, you can just cut it without thinking.
Yeah, if BTC performs and runs, and then we see any marginal improvement in the ordinals ecosystem, at some point, I think it will take a run. It may take time, though. By then, maybe A16Z runs up like 5 times and runs down like 10 times. That's possibly what happens. Yeah. Look, it's very clear. By the time in November, we were working on a lot of things on the meme coin infrastructure and so on. We saw that the AI agent infrastructure completely took over, and nobody is able to do any good mind share on the meme coin side. Like the largest mind share in CT right now is an AI agent. It's not even humans, right? It already explains what is going to happen, and there's there's like 50 launch pads coming up on AI agent infrastructure. So we are probably going to see a pump fund type of a scenario again on AI agent side, and then dilution happens, and then we see Solana take a hit once again, one way or other, right?
Yeah.
But what will happen is something will stick compared to the meme coin side. When the AI agentic infra is dead, eventually something will be useful that all of us in crypto side can use it. So this was a thought-provoking question I had with a few of my friends who are deep in the trenches in AI agents and crypto. So the question I asked them is like, okay, all these are great. I hold a lot of the tokens that you guys hold as well. So, but what are the AI agents that you're using that has come out of this infra, right? Of all these things, and nobody could come up with an answer. So everybody's bullish with the hope that there will be something that is useful for future, right? So right now, none of them is useful. Like you literally cannot go and put useful money behind that. It's same as meme coin infrastructure.
Yeah.
Just gives you a better validation mentally that you're a smart person for investing in it.
Yeah. So it makes me think of the, I guess the idea that innovation happens when you combine novel with useful, right? Right now we have something novel, but it just hasn't proven useful yet. And perhaps 2025 is the year it does.
Yep. To be honest, I mean, we haven't seen any agent so far. I mean, we have seen automation, we have seen discussions, but we haven't seen a true agent. I mean, there was a discussion about what you call an agent. So agent is not something that is just automated. Agent is something that can take an autonomous decision on its own. We haven't seen anything that has come out yet, because there is one side of it where it can give you suggestions, but so far there is nothing in the market that can take the decision on your behalf. So that's when those things start to come out. That's where we'll see now the agentic work has clearly started.
Well, and I also, I guess, imagine a time where it's actually coming up with useful ideas to test out that can add new utility that hasn't really been, because a lot of it is basically, it's like you have an idea, it helps you build it, and it can help you start off with some of those ideas, but it's not identifying the gaps or the changes or the problems that it can go out and solve. At least I'm not seeing that from my vantage point. So, okay, guys. Well, I think we're going to wrap up this segment going over the trades. Hopefully everyone here is thinking about AI agents for 2025, because you guys, I think, have made a very bullish case for them. Interested to see how that plays out. And I'm interested to bring you guys back next week when the first week of 2025 gets going, and we can see if Bitcoin is heading towards that next 6K milestone, and we start to see some movement. Maybe that order trade plays out. Maybe Ethereum starts to see some life. Maybe Solana is starting to moon bright again. We'll have to see, especially if its whole reason to be is meme coins. Maybe it's going to have to find a new one when the AI agents are running. We'll have to see. But Benjamin, Ahmed, thank you. Happy New Year's. Love to see you guys back next week. And Ben, Lily, are you ready to join?
Thank you,
sir. Yes, sir.
All right. Thanks, guys. Ben, any initial thoughts before we get into the trade report based on what you just heard?
A lot of interesting discussion, a lot of interest on AI agents. We've been spending a lot of time on it as well. And it's incredible market. There's so many off the shelf, in terms of infrastructure that's out there that has yet to be utilized. So when we think of narratives and possible trends that have long legs, this one does have that. And so it is exciting. We're just at the surface here. So it's, as far as the second half of the cycle here, 2025, this really does feel like one of the most dominant trends. And we've been studying it for a while because we've been building in the space as well, and we hope to bring some of those solutions to market. So it's exciting.
Good stuff. All right. Well, let us know in the comments if you have specific questions, ideas, things you'd like us to see about unpacking for 2025 around AI agents. Frankly, it's feels like the list of questions is so expansive. It's like trying to figure out exactly where to go. But I'm sure we'll be bringing that more up this year. But let's transition, talk a little bit about the flow report. Thinking a little bit back to what we were talking about 2 weeks ago. In terms of Ethereum, Bitcoin, and Solana. I think Solana is the easiest one to start with. I'll kind of work my way back. Solana was struggling to find a new narrative since Pump.Fun has sort of lost its legs. So we were trying to see if there was anything else that was going to be kind of moving in. Babylon was doing some good work on Bitcoin, and the ETF flows have been stronger. Of course, over the last week, last 2 weeks, we've seen about $1 billion in outflow. And then the question is, are other things coming on chain? And then from an Ethereum perspective, I think there's just a lot of debate we were having around terms of fees and how that was going to be impacting some of that demand, what people were going to be looking for. So I'm very curious to see kind of where are we right now? And you choose the token to start with, whatever's first on your radar. How are they looking? Especially, we were just looking at some trade setups for all three of those. Curious how that would contrast with some of the trading opportunities.
I'll try to do a similar setup that you did with starting with Solana, because we usually keep that off the last, but it's worth at least just diving into it and trying to buy a little bit of time, because I'm very curious what the Grayscale Solana trust has looked like, because I haven't looked at that in a long time. And there is some interesting stuff, which we'll get to in just a moment. But instead, what I would like to start with is just when we talk about Solana, a lot of the prior conversation has sat on Pump.Fun. And to recap, because it's been 2 weeks since we really started discussing this. And so, maybe some of us are new here or haven't really been following along, and that is great. Welcome. Happy to have you. But Pump.Fun, what was it, back in October or November, when I think it was November, when the live streaming was getting a little crazy and it decided to take it down. We saw activity start to come back down as well. And as far as all the statistics related to Pump.Fun, we kind of saw that being pulled back as well, whether it had to do with the amount of fees that are being captured or whether it's the amount of tokens being launched on Pump.Fun, which we can kind of see. But one thing that's really interesting is that, all the users and the activity, it hasn't really gone away. It's just not as, hot as it was before. And I think that's really important, because a lot of times when you see things kind of subside and narratives start to shift and move around, you usually see that mercenary capital go somewhere else. And I don't necessarily think it's left. I think a lot of these participants are still there. And the main reason is you kind of look at the time frame of a lot of the activity that we see as far as daily active and new addresses. It kind of coincides with like the last week. We can think of it as like downtime, if you will, sitting at home for some of these individuals during the holidays, and they're active, right? We know Wall Street's not very active. We know the ETFs aren't very active, yet you're seeing some of the retail corners of crypto show some activity, especially on Solana. And so I think that's a really good sign if Solana is going to have like a kind of a second go at it here in 2025. So as far as Pump.Fun, it is showing a little bit of a revival, but not as much as you would hope, because you don't see translating to the amount of fees being realized on the network, right? So it's not enough to move the needle as far as to get a lot of demand to that SOL token. But you do see the user still there. You still see the activity there. It's just not to the degree it was. Okay. So it's positive, but it's not at that inflection point to really move the needle as far as native demand. And one of the interesting things I also kind of noticed when it came to Solana is that its lending and borrowing markets are actually pretty healthy right now. As far as the amount of usage that's taken place, like you can see a lot of the markets that do exist as far as communal finance, you are seeing people, take out those loans. And so usually when you have the pullback that we saw, and I wasn't looking at this over time, and maybe I should see if I can pull this up here. But a lot of times you see those liquidations, you see this reset take place, and then you want to see kind of loan originations come back, because that's sort of credit creation. Credit creation leads to, asset growth or economy growth, if you will. So let's see. Let's look at the 90-day here. Supply and borrow. These are numbers. So you kind of see you did have that pullback with the rest of the market, and the amount of borrowing is kind of being stagnant. So it's not terrible, but I mean, it is pretty much, fully allocated for the most part. Unfortunately, you're going to have to see the cap start to rise here. That would allow some future growth. And maybe that's a catalyst to look out for, is if you see kind of higher limits show up, people will go ahead and start to tap that. So in summary, as far as like the on-chain activity, the fees aren't at that tipping point. You do have those users still there. You do see the activity is still there. It's just not as euphoric as it was before. So if the market starts to come back to life, numbers starts to go up, the greatest technology on earth, I think you would start to see the activity kind of hit that inflection point to bring that fee demand, the demand for using SOL tokens on the network, start to inch up to be important. So I think it sets up for a good Q1 here. Now, as far as the flows relative to kind of institutions, that was something I just thought of right when we were coming on, at least when I was coming on air. But this is the Grayscale Solana Trust.
It doesn't look very healthy.
It does.
Or am I reading that wrong?
You are reading it correctly. The NAV per share. And I really want to look at when the most recent unlocks were taking place, which I'll probably do it in the next couple of days, because this really does have my interest here. How do I sum this up quickly? So without getting crazy. So you have market price of the underlying assets, and then you have this value of NAV. So NAV is the net asset value per share, and usually you want it around 1, if I'm not mistaken. I think I am mistaken here, but really just there is a premium attached, which isn't surprising, because Solana is an asset that a lot of individuals, they'd rather get it into their, maybe retirement account. And so getting access to spot SOL on Coinbase or kind of other exchange offerings are a little more difficult. So this is just a simple way to gain that exposure. But there are investors that are willing to go ahead and essentially hand over their SOL tokens to Grayscale. In exchange, those investors will get those trust shares. They're locked, and then I believe it's a 6-month period. Those shares get unlocked, and then those investors, which are accredited investors, can go ahead and sell it on the open market, and this increases the amount of outstanding shares that exist in the market for retail to purchase. And they sell those at a premium, so then they can turn right around, go ahead and purchase more SOL tokens off the market, give those SOL tokens again to Grayscale, and run it back until that NAV disappears. And this was a popular thing that took place with Bitcoin back in 2020, 2021. And so once that NAV, which was that premium, which was over 1, once it really kind of went negative, it was essentially trouble. And I remember documenting it back in 2021, and there was just a tsunami of unlocks coming right when the NAV was starting to turn negative. And that was the end of the cycle. That really spelled the end. And if anybody remembers December 2020, Suzu from Three Arrows Capital, he was running this grayscale trade for, I believe, for the better part of the year. I believe there was a big allocation that he did in June. He went ahead, I believe he did more in July, or he was buying call options, I think, in July, as he was buying spot, but that's a different story. The end of December, there was a press release that I believe it was like $1 billion of capital got allocated to grayscale, essentially. And it was this trade that they were doing. And it eventually is in part what sunk the ship back in June and July as they doubled down on a bet that was going wrong. But it was right when the NAV was starting to turn negative, and really that trade started to sour.
So, Ben, there's a lot here. I just want to make sure I'm following it correctly. If you look at that historic example that was happening with Bitcoin, Three Arrows Capital, is there a concern when you look at this chart that something similar could happen again?
Yeah. This might mark, so I guess the net asset value per share is essentially the amount of Solana tokens that are really representative per share. And maybe it's not tokens, but maybe it's dollar value. And then you have market price. And so you can see, $70 is the market price per share. But as far as like how many SOL tokens are represented per share, it's about $10 worth back in June 2024. So if you look over here, you kind of see this big change in this premium take place, looks like early November. And I'm going to guess back in early November is probably when the Solana trade started to sour a little bit. Actually, that's when it was pumping. But again, I'm going to have to look at this in greater detail to see when the unlocks took place. Because there's definitely something here.
Yeah.
There is definitely something here in terms of the flow of SOL tokens that are taking advantage of this outsized premium. And perhaps what really took place is, in this early November period, there was a big unlock that took place. There was a lot of selling that happened in the market, but simultaneously, as that selling was taking place, there was probably a lot of SOL buying taking place on spot to run back and do that trade again, which is similar to what we saw with Bitcoin. And the timing kind of lines up pretty well here with kind of how big of a pump we saw. It was in the post-election environment, so it's kind of hard to tease away the two, but here you go. You have quite the outsized candle happening in early November. So something to dive into a little bit more for next week, perhaps. But there's something here for sure when it comes to Solana. But abstracting away the flows related to institutional products, Solana has some good things showing, especially in this period where everything seems to be like just kind of boring and people are just uninterested. Solana has something that I think the rest of the market is lacking.
It'll be very interesting to hear from you as we go into 2025. We talk about AI agents, how that starts to manifest, how it impacts chains like Ethereum and Solana. I say them because they have the ability to build today in a way that Bitcoin doesn't. With all the
Solana represents just like a quick and dirty way of getting something related to AI agents out into the market. And that is kind of what that ecosystem is really good at. especially when it comes to like getting it in front of retail, getting it in front of people, getting it into their hands in some capacity as far as the asset and the exposure to it. What Ethereum ecosystem and like Base, for instance, is really good at, I don't think that's been realized quite yet. Virtuals is great, and everyone talks about the premium that exists between virtuals and VVAIFU, which is sort of the exposure to kind of the AI 16Z and ELISA framework trade. Virtuals suggests that the premium might be related to essentially, you can almost think of it as like the average, I don't want to say average salary, but essentially just like the net worth of the individual sitting over in virtuals or the Ethereum ecosystem, because they're paying these higher gas fees. Traditionally, their net worth as far as on-chain capital is likely more than an individual that's sitting on Solana, who's, when fees start to rise to, 25 cents or something, it's like, whoa, or a couple dollars, like this is really expensive. It's like, you have no idea.
Yeah.
So a lot of the premium has been attributed to that between those two ecosystems. But I think part of it also is that there's a lot of off-the-shelf infrastructure that exists that is starting to be tested out when it comes to AI agents over in that ecosystem. Like I know EigenLayer has been busy building some of these active validator services that can help, again, service these AI agents in some capacity. And you see solutions like that. So then if an AI agent is able to kind of run free in that ecosystem, it has just a lot more tooling available to it. Not to mention, if they want to go ahead and engage in DeFi in some capacity, there is a lot more options that do exist for that agent. And so ecosystem at whole is just, there's a lot more runway.
Right. It's interesting, what the analogy that came to mind is like, if you were looking to do financial and almost anything, right? Going to London, going to New York, where they're so rich in terms of capability, capital, but it's also regulated, right? So it's got some trade-offs. You could go to like Africa, you could go to like South America, you could go to parts of Southeast Asia that things are not built out, right? But there's also very little regulation. So could you get going very quickly? Absolutely. Are you going to have access to all of the infrastructure? No.
Yeah, I think the first spot gold ETF, I believe, was in Australia, if I'm not mistaken. And then eventually GLD ETF happened in the US, I think in 2003. And of course, then that was just really an explosion of AUM that took place in that gold market. But, it was almost like you saw a product market fit take place, but maybe it didn't have, access to essentially this infrastructure of distribution.
Right.
As far as like getting into investor portfolios, getting into financial advisors' hands, just having that accessibility is important. And when the GLD product came to market, we kind of saw what happened there. And, to give Solana a lot of credit, it definitely has those rails built up to get in front of retail. But as far as like kind of the more nuanced infrastructure and the ability to kind of take these pieces of, Legos, if you will, and piece them together to create, kind of more on-chain solutions. I think that's where Ethereum could shine if it decides to go ahead and do that. I know it has trouble with like UI.
Well, let's pivot then to Ethereum, unless you want to do Bitcoin first, because I think we have a good case for Solana we need to come back to in terms of what we're seeing there.
Sure.
Like you said, it's kind of it's not dead, but it has kind of died down since Pump.fun, but it's certainly not dead. But then there is this sort of albatross kind of hanging out there saying, okay, we don't know about the grayscale. Could that be a potential problem? But we'll come back to that one.
Yeah. Not necessarily a problem, but like, hey, like this might be the end of kind of the possibility for Solana to really have upside movements that are, beta to the market. So I think that's what Grayscale represents. For Ethereum, I don't have a ton on the AI agent side, but as far as like kind of things that stood out regarding the flows, I didn't even pull up Farside Investors, but I know Ethereum over the last week or so has had positive flows. I want to speak really slowly in case I'm interpreting. It is good actually. So
it is good. Yeah, I looked at
ETF flows have been very strong. I mean, you're looking at, I'm assuming these are millions, so 100, almost 300 million. It looks like over the last week. And as far as when we last spoke, it's definitely in the positive realm, which is in stark contrast. We'll bring it up here soon with Bitcoin, which, this really teases at what Q1 might be here, which is if you're starting to see these flows happen essentially in the off hours, in the inactive time period for Wall Street, this is a signal of trying to get in front of something. And so you do have essentially the profit possibly taking place on the Bitcoin ETF and moving into kind of next year's play. We'll see. I mean, I know there's a lot of discussion taking place with getting kind of yield and staking into these ETH ETFs in some capacity. And I know that a lot of advisors, even Microsoft kind of alluded to it, of like how that really is a game changer for them to be able to kind of have a productive asset that is a digital asset and crypto exposure in a portfolio. Are we going to see that narrative get louder in January? I have to imagine so. So this could be kind of that early indication here. As far as on-chain movements, what stood out, and so we can step into the lab here for a moment. Some of the charts came out end of last week from one of our on-chain analysts, and I'll explain this here.
Yeah, perfect.
When we look at supply on chain at JLabs Digital, one of the things that we like to do is look at, first of all, how a token is used. Is a token sitting in just a basic EOA wallet? Is it sitting on a centralized exchange? That sort of way in which that token sits, behaviorally speaking, the individual or that asset is more likely to be sold if price changes. If that asset, in terms of how it's sitting on chain, is sitting in, let's say, a liquidity pool on a DEX, it's productive. It's earning yield, whether you have kind of the impermanent loss portion of it or not is kind of irrelevant here. The likelihood in which that token is to be sold for a 1 unit change in price is less likely than if it's sitting on a centralized exchange, which means it's technically less liquid. We call that a little bit more inelastic. If that is sitting as supply in a lending protocol, it's actually even stickier. It's essentially even more illiquid. And so the way that we like to look at supply is to try to almost profile it in this way where you have on one end, highly liquid tokens sitting on chain. Behaviorally speaking, they could be selling, at the drop of a hat. Then on the other side of the spectrum, let's say you have ETH, for example, staked to Beacon Chain with no liquid staking token or restaking token attributed to it, right? So it's like highly illiquid. Like you have to go through the whole unlocking process to go ahead and make it liquid again, right? So like all this percentage change in price is going to have to be a greater change before that gets unlocked and then sold on the market. So that represents like highly illiquid supply. And so what we did was we went ahead and we categorized, how tokens sit into these buckets of, you guys, listeners might have heard me say this countless times, but M0, M1, M2. M2 is what we like to focus on because M2 is this illiquid type of classification that exists. And so if we look at ETH sitting on the Beacon chain, being staked without any sort of liquid staking token or restaking token, that's going to fall into M2. And also, if it's sitting in a lending protocol, we classify that as M2 as well. And there's a couple other ways that we do it. And so this chart right here is all the different versions of kind of ETH tokens sitting, as M2, right? So here we have 25 million. So for, a token with 120 million tokens in supply, like this is monstrous. Okay, I can't stress this enough. Like, you have over 20% of your supply sitting in kind of being used on chain in this manner. Like, not many tokens have that kind of diverse type of usage. And so we have it broken down into.
Yeah, so maybe for the audience, it's kind of hard to read the legend. What are there's 4 different colors there that are represented. Are each of those M0 through M3?
Yep. So you got, staked to Beacon Chain on this top of this purple. That's why you kind of see it pop up here in December 2020, which is when it really took off. This green area here is, restaking tokens being kind of put into lending protocols for the most part. So liquid restaking tokens that are illiquid. I know that's a lot of liquid phrases there, but that's, you kind of see it really come about early 2024. Here you have liquid staking tokens, which would be like your staked ETH, Rocket Pool ETH, Coinbase ETH. This would be those tokens sitting in this illiquid form here. And then down here, this would be like your basic old ETH or kind of wrapped ETH, if you will, sitting on MakerDAO, sitting in Aave, sitting in Compound, kind of protocols like that. And so you want to see this go up into the right? And you can kind of see it as it starts to rise. You kind of see price start to rise as it begins to start to fall. Price eventually follows suit. So we saw in 2020 a lot of staking, a lot of DeFi usage. Price starts to rip, and then you start to see people start unlocking things, start to change that liquidity profile here, and kind of coincides with the top of the market. And then you kind of have that base form. People start to use DeFi again. People are willing to kind of move supply into these illiquid forms, and then you have price follow suit. And what's nice about this is that it's not like this changes one day and then price follows the same day. This is a trend where it plays out over weeks to, months, and then prices, because again, this is like a slow glacial shift of like how supply sits on chain. And then as demand starts to show up, you see that spring. So you have it kind of climbing up. And so what I wanted to hit on today, the reason we bring up this chart and we spend 40 minutes talking about this one chart is for this little downtick here. So as far as like the flow of tokens on chain, we're starting to see some of this supply shift from M2 into kind of more liquid forms. And we can see it highlighted here. There was some individuals specifically, as well as entities that were unstaking their tokens from Beacon Chain. One of those was Daniel Wang. I believe it was over the last week or so. This is the founder and CEO of Loopring, who also does the L2 of Tyco, one of the more popular L2s that exists. He unstaked like 100,000 ETH recently. I saw on Twitter that somebody was saying that somebody was selling in mass ETH tokens and they were a founder. I thought they were saying a founder of ETH, and maybe it was, and this has nothing to do with what we found here for the flow report today, but this could have been some sell pressure that existed, end of the year selling for tax purposes, whatever. But that was significant, like 100,000 ETH getting unstaked. That shows up on that chart that we were showing about. And we also see some movements from Galaxy Digital, Coinbase as well, and Lido. There was another chart. There it is right here. So you can see the amount of ETH withdrawals happening from Beacon Chain. I know these figures are hard to see, but yeah, Daniel Wang's up there and Galaxy Digital, etc.
So,
go ahead.
So if you're starting to see some of these larger unlocks from these larger accounts, price in some ways hasn't really. You talked about earlier. Typically, you're going to see some of that unlocking as when you have bigger changes in price, and as we've talked about, for Ethereum, price hasn't really been its strong suit for the last year. What is your thinking there in terms of when you see that behavior? Is that consistent with what you would expect? Is it different? Is that a little bit of a sign of something else than just normal market dynamics, where people are moving from the most illiquid to more liquid when price is down?
What it feels like was that it was a race for end of the year selling.
Okay.
Based upon the individuals we kind of see doing, like we see somebody from a big project selling, like they're not selling because they don't believe in the asset, because they've built, they're massive projects on Ethereum, for instance. So are they selling to raise capital? Maybe, but coinciding with the timing of the end of the year, same thing with Galaxy Digital, which they have clients that they represent, and Coinbase, that similar type of mentality there. Like this feels like it has to do with the end of the year, trying to lock in, certain things for tax purposes. So I would imagine over the next, in January, we're going to see a reversal here. We're going to see ETH move into staking. We'll probably see these same entities, do the same thing again, kind of reverse it though. Now, that had to do with native staking specifically. The other thing I was going to bring up is as far as the change in flow. So this one, we mentioned a lot of these tokens, how they sit. We categorize them as M2. Here are some of the protocols that we categorize as M2 here. I mentioned Maker, Aave, Compound, Morpho, Spark. These are some of the biggest ones that absorb a lot of ETH and that fall into that classification. MakerDAO is the biggest, and you can probably see it because it's so tiny on your screen, but it saw about 2,000 ETH change in terms of the M2. That had to do with liquidation events that took place as price started to climb down. The other one was, I believe it was Spark. I think Spark saw some decent changes. Aave actually had an increase, likely because they have really good supply yields right now. But yeah, Spark, try to make this a little bit bigger. That had a bit of outflows took place for month of December. It had a kind of a one-day spike, and it's kind of back to where it was. Spark is kind of part of the MakerDAO ecosystem. So Maker has got an outsized play here as far as how ETH is being locked up. So taking a step back.
Yeah, I was going to say that maybe summarize this, because there's a lot of data here for, because one of the reasons, just want to bring it back to like the reason we look at all this information, the reason you're digesting is to really start to see, are you seeing strength or weakness on the supply and demand side that could eventually kind of materialize as more. It sounds like what you're saying is you've seen some selling, some unlocking from more less liquid to more liquid, could be end of year kind of sell off that's happening. But it also looks like maybe you're seeing some of that institutional buying coming in on the ETF side, maybe starting to get ready for 2025, going into Q1 of 2025. But overall, it feels like it's a little bit of a continuation of the year, with some green shoots starting to show themselves.
Yeah, it feels like it, as far as the flow of ETH tokens, you have demand showing up, on the ETF side.
Mm-hmm.
That is alluding to, potential narrative change getting ready, because you have the outflow, which we'll get to on Bitcoin. Then you had some end of the year, it looks like unlocking and likely selling pressure. Anything at end of the year, you can always kind of chalk it up for tax purposes, but could be just because, price was going down. But, as far as like the entities that we see doing it, I have to imagine it's more tax related. These aren't day-to-day type of entities in terms of movements, as it relates to price. So to me, this is a bit of a short-term hiccup as far as the flows are concerned. You're going to see the ETF create sort of this catalyst, in my opinion, as the start of the year changes. You'll see M2 likely start to pick back up. And I think, December, it wasn't looking good. So first week in January, we would expect to see a bit of a change. And if we don't, we should be cautious.
Well, yeah, I mean, it's not something we always analyze here, but the outside forces, right? The macro economy, changes in the politics, the fact that we have a new president coming in January, with a lot of promises on the table for the industry, not just Bitcoin. People focus on that, but the clarity and regulation, giving new leadership at the SEC and other parts of the financial apparatus. All of that is not stuff that we're analyzing, but is going to play a role in the appetite for these assets and for what they deliver. So it's something that we have to keep an eye on, right? You could somewhat say the ETFs are a proxy for that, but nothing is really as good as starting to see those laws change or the rules change, and some of the announcements actually come out. So
I mean, how frequent does a regulator, shift happen for an industry, especially when it's like it's never really been given the limelight or the time of day to gain a foothold and have growth and allow innovation to kind of run its course. Like, as far as like that first kind of 0 to 1 moment, this is it for the digital asset and cryptocurrency space at large. So we shouldn't underplay that. Like, this is going to be one of those things in hindsight. It's like, well, yeah, obviously this was going to happen. Of course, like everything was changing, and Trump was coming into office, and he promised all these great things, and all of the cabinet members and everybody being appointed was holding Bitcoin, and they mentioned they were pro crypto. And it's it's easy to like nitpick certain things and like, oh, you know what, he's not going to be as strong as we all thought he was. But you know what, price is down, right? It's retraced a lot of the months gains and all that momentum. It's silly to think as far as Q1 is concerned, like we're going to continue to just have this pullback. I find that one hard to believe. And as far as like zooming out even further, as a year at large, like as far as where we sit right now versus where we're going to sit in 1 year, where do you think we're going to be, in 9 months, in 12 months? Every reason to believe we would be much higher from here. Just for the regulatory standpoint, regardless of like, Bitcoin cycles and market cycles and, various narratives and products coming on chain. Like, forget all that for a moment and just focus on regulatory landscape. Much better. Why would price be down? Unless he changes course, but that seems unlikely.
Yeah.
Now,
I agree with you. Absolutely agree with you.
So flows look not great for Ethereum of late. will we see a shift, at least in the next week? I guess that's something we'll be hitting on next week. I would hope to see some more green shoots show up that would lead to it. But one thing I did want to point out before we move into Bitcoin was that on the fee side for ETH, we're starting to see a little bit of an uptick, and it's showing a little bit of a trend. And one thing that I really want people listening to understand is that when you start to see fees start to rise, and it's not related to major sell-offs, that's something to take note of. That's usually an early indicator for a longer trend that's going to last weeks. So here's Paint a Terminal. This is kind of our data analytics platform that we made. And this yellow line right here is fees. Put a moving average on it.
Hold on, we're not seeing it just yet. There we go. All
right, so down here, you know what? I can make this a little bit easier to see if I drop it on top of price. I'm going to put this moving average up here so you can kind of see how it relates to price. But when you start to see this red line right here start to tick up, and then you kind of see price start to move with it, that's a good sign. It's just when you start to see it, as you can kind of see here earlier this month, looks like December 10th, fees were starting to pick up, but that had to do with a sell-off, and that kind of alluded to us topping out around that time period. Same thing, fees started to spike as we had this sell-off take place. You can think of that as like heightened liquidations, heightened flash loans taking place on chain. A lot of this activity having to do with arbitrage that exists when price starts to go down. That's why fees would spike when price starts to go down. And so you want to see fees rise either when price is going sideways or when price is rising. That's healthy. Okay, and we see kind of the early stages here as of just over the last 24 hours. We're starting to see a little bit of a trend show up. So if price does start to break, I have to imagine the fee trend is going to continue to go on. Maybe that starts a little flywheel process with ETFs flows and not, but seeing the fees do what they're doing right now, I think that's a good bullish indicator for the next
could be
week.
A good leading indicator for what could happen in Q1, maybe as early as January 2025. All right, well, let's definitely keep an eye on that, as well as also coming back and seeing if if we're starting to see a continuation in terms of the staking on the Beacon chain, or if it's going the opposite way for whatever reason coming into 2025. All right, so we've gone over Solana. We've done Ethereum. We've got Bitcoin last on the table today.
Yep. Absolutely. Sorry, I was pulling up the borrowing rates for ETH real quick to see what they were doing. But you can see borrowing's those rates when they start to get elevated, just take note. But they've come down a lot. So that's a healthy reset that's taking place. But yeah, getting to Bitcoin. Sorry, I just can't stop being distracted with myself. With these charts, but for Bitcoin, let's see, we can quickly pull that up over here. So the big takeaway here is just what has been happening since we met 2 weeks ago. Last time we spoke, there were just massive inflows taking place across the board when it came to the ETFs. 22,000, inflows in terms of Bitcoin moving into those ETFs. Babylon, for those that don't remember, that's liquid restaking protocol that's taking place that allows people to go ahead and stake Bitcoin or go ahead and engage with DeFi and try to earn yield on their Bitcoin. It's a layer 2. I think it's a layer 2 solution. It lifted its cap, so it saw massive inflows. People who are waiting to go ahead and take advantage of all of those offerings over there. So yeah, 32,000 Bitcoin was flowing into that illiquid type of environment. That was very bullish. MicroStrategy, we all know what was going on there. But then what has happened since then? Look at this.
Yeah, absolutely.
It is like a complete reversal, right? 10,000 Bitcoin outflows to ETFs. Babylon hardly saw an uptick since it lifted its cap. And over the last 2 weeks, only had 2,000 Bitcoin flowing in. MicroStrategy, it was just announcing those purchases, and it felt like, it was almost like I have no more strength left, but I'm going to try to get as much hype as I can with these purchases and allude to purchases that you don't know is happening. Oh, it's so bullish. You can't, but it just felt like a last ditch effort to try to move things. And you almost felt like sorry for Saylor when he was trying to build up the hype, and it was like, you just don't got it right now. So this is the story, right here. Like if you even pull up like the Coinbase premium, all those flows, like we know where that's hitting. So let me pull up Bitcoin chart. This right here, I'll make it a little bit larger so it's easier to see. When it turns into red, that just means that the price for spot Bitcoin is a lot less than what exists on Binance. You can kind of think of Binance as where crypto native individuals will be trading across the world, as far as like where institutional type of investors or products will engage with crypto. That's going to happen on Coinbase. So when you start to see that spot start to dive down on Coinbase relative to Binance, you can kind of assume where the selling is originating from. And based upon the flows over the last 2 weeks that we were just looking at, it's no secret where that was originating from. And it just kind of coincides with the last time we spoke, which was the 17th of December, I think.
Yeah, it was, yeah.
And there you go, right? This is essentially all the ETFs just unloading on the market. And we need to see this come back to at least even, right? We need to see that reset take place. Is it going to happen the day that kind of Wall Street gets back on their desk? Likely will. So we're kind of just
I was going to say
till then.
We've kind of talked about in the past this is a juggernaut for BlackRock. It is a cash machine for BlackRock. Add on the options trading that go on top of that. It just adds additional fees. They're looking to juice this much higher is the expectation, right? And the networks for distribution have come online in 2024. They'll continue to expand in 2025. So there's all the reasons to be optimistic, combined with the other things that we've talked about that could continue to see this grow outside of the outside forces that we don't necessarily know exactly how they operate. But this is a good metric to be looking at to see how strong that growth will be. I mean, I think Bitwise, if I'm not mistaken, they came out saying they think the flows would be higher or stronger in 2025 for the reasons we were talking about, the network continue to strengthen. I think that's one perspective. I don't know what probability I'd put on that. But it's certainly an interesting one, given that these were historic in terms of growth for 2024. So Ben,
yeah,
I guess
it was incredible.
Yeah. Did we lose you? Oh, looks like Ben may have frozen for a bit. We'll see if we can get him back.
Seems like we're lagging.
Oh yeah, it seems like we are. Okay. You back with me, Ben? Yeah, I can hear you. Oh, it looks like you're now live again, or it just keeps on bugging out. You want to say something? Oh.
Yep. Yeah, I only had one more thing to add.
Oh, yeah, please do.
I think I'll just add it in case I'm lagged here. I'll just keep going. And as far as Bitcoin is concerned, I think we just have to wait to see that premium return, which will probably be coinciding with when Wall Street decides to return. And really kind of the main thing that was interesting was that fees alluded to kind of this pullback before we saw it on the 17th. And if you guys don't remember, I believe that was right around when Jay Powell was talking. But on the weekend before that, fees were starting to pull back. You kind of saw it break trend, and it hasn't climbed back up since. And so fees, like, still to this day, is a really good predictor of long-term trends. Just like I'm alluding to with Ethereum, it's going to be similar with Bitcoin. So over the next few days, as we move into this new year, if we can see the fees start to climb an inch higher, I think that's going to bode well for January to get a bit of a recovery. If not, then we'll just have to wait and see.
We'll have to wait and see. Well, unfortunately, we're going to have to see all that for all the chains. But as we go into 2025, I'm optimistic. I'm looking for a very good year. Of course, you could throw up that that's always the opposite of what you want because your expectations will be dashed. I guess with that, is there any parting words, Ben, you want to share for 2024, or any optimistic words you want to share for 2025 with the audience before we wrap up today?
Don't overthink. Keep it simple. I know macro's got some scary prints coming in, and Powell has been talking a little hawkish of late, not to mention, things that have to do with cutting a lot of jobs, as far as like when Trump comes in and reducing spending. You can interpret that a lot of different ways. And even seeing all the majors show up in equities relative to the rest of the market, like, you can kind of abstract a lot of things away when it comes to crypto, because it is cyclical, and we tend to attach whatever is popular at the moment to the reason why price is moving. And as long as we continue to be in this 4-year type of cycle that exists within crypto, I wouldn't try to overthink things too much, especially as we move into 2025. Like, it's still asymmetric to the upside, and if we're going to go ahead and try to mid-curve everything and overthink, what's taking place at the economy at large, and decide, let me be a little bit bearish here, price might retrace, 5,000 on Bitcoin or down to 70K. But at the end of the day, is that trying to grab those pennies in front of a steamroller that's getting ready to go to, north of 140K per coin? And if that happens, what's going to happen to the rest of the market? And then you were over there just kind of worrying about something that wasn't going to have an outsized impact on price of the downside. So keep it simple. That's all I got to say for 2025. This thing is moving until, the holidays for next year. Ride it, get conviction in your bets, dive deep into whatever you're researching, and pay attention to the demand and supply. That's all I can say.
I like it. Keep it simple. Definitely something that to keep in mind as we go into 2025. And a lot of what you just shared, I had a video on the channel published, sort of these 9 principles that I've used to invest that I think are really going to be the difference between those who make and keep money during these 4-year cycles and those that are constantly chasing the pennies and walk away. Maybe they have some fantasy gains at some point, but they lose them, unfortunately. So if you haven't already, I would definitely suggest watching that video. It encapsulates what Ben talks about, as well as adds some other ideas. Talks a little bit about what I'm doing, how I've used J on chain, or J in general, not necessarily fully on chain yet, to help me with my strategy. So let's go check that out. I will say 2025, I'm very optimistic, very bullish. We don't know what's going to happen. There's always a period of uncertainty, and before the uncertainty, there can be great opportunities. Always have some dry powder on hand. You're going to want that, and definitely rejoin us. We're going to continue to do this story and be the place, the beacon for unvarnished truth as we head into 2025. No shilling here. So with that, have a great New Year's, everyone. Be well and happy and safe, and we will see you in 2025. This is Marconi White signing off.